Hey, this is Justin with DayTradeTheMarkets.com on Tuesday, August 13th, and I wanted to look at a few different markets on a few different time frames and talk about a little bit of a different mindset required when you're doing more day trading versus more swing trading. And this software, just for for an overview, you can use this for basically any time frame. We have people that put this on micro time frame charts and scalp. We have day trading people. That's what I tend to do. We have people that swing trade, and all of that's fine. The same logic and applies, and the same idea of just trying to increase your edge applies. But what I thought I would do is just give a few examples because today was a kind of an interesting case. Now, normally, and we've talked about this before, and there's a lot of other videos on our site, we look at a lot of different aspects and different pieces of evidence. We look at some bigger picture to get ourselves some context. We look at, high velocity move, support resistance zones, filter, deceleration, that sort of thing. What I've done, though, with this chart is I've stripped it of all that. I've just left on what we call our relative aggression bars and our strong and extreme relative aggression bars. But with that said, this happens to be a 1 minute chart of the ES. And I'm going to show a couple different time frames as well in a second. And heading into the day, our bigger picture bias was up. So from a swing perspective, in all things equal, we would rather be on the long side. And we had a few different support zones, but essentially around this 1680 area is where we were looking potentially for some support. Okay, so if you're a swing trader, then you're thinking bigger picture bias is up. I know that the 1680 area is some pretty good, should be a pretty good support level. That's probably where you're looking to get long. And again, if you're a swing type trader, then you may just want to stick a limit order in there and give it a little bit of room because you're going for a bigger target. And with that said, let's look at it from a slightly bigger time frames as well. Here happens to be a 5 minute chart, okay, and again that area around 1680 right in here, and you can see that's a good spot to get long with. But if you're looking a little bit bigger time frame, you can wait to actually see some buying that's coming into the market. You see that we had selling, some strong selling, then we got some pretty good buying on a 5 minute chart. So you can either just stick an order in there and use a few points as some room to move. A few point stop has give some room to move. You're kind of stepping in front of a train and hoping that level holds, or you can kind of wait for some confirmation. Okay, you can see a similar scenario here. Here's a 15 minute chart as well. Okay, so again, you can see this happened yesterday as well, right around this 1680 area. Now, yesterday, if you would have stepped in front of that, it would have gone against you 3 or 4 points. But it wasn't until here you got some confirmation that buyers were really stepping in. Today, the buyers stepped in a little bit earlier, okay? But again, that's a key level we've been watching in line with our bigger picture. So if you're a swing trader, you can either just put your limit order in at that level and give it some room, or you can wait for some confirmation, like we see here, okay? So that was a 15 minute chart. Now, if we go back to this is a 1 minute chart. If you're more of a day trader, then you probably want to be careful. And we were actually doing a live session today, and one of our members was talking about this, how he just stuck he's more of a day trader. He likes to kind of get in and out of the market quickly. He stuck an order in right here, just kind of got in front of stood on the train tracks and hoped it would turn around. It actually did. He was perfectly right, but he got a little spooked and got out of the trade. But that raised an interesting point. If you're a swing trader, that's fine. But if you're more of a day trader that likes to keep your stops tight, then you're going to want to wait to see some actual evidence at a key area that you're targeting. So here you can see that it's we had some really strong selling. So the market seems to be really controlled by bears, and in the short term it wasn't until we reached this major support level that we've been looking at that you can see this is our first selling structure that didn't have follow through. And in fact, some strong buying actually started to come into the market as well. Okay, so that's that little extra piece of evidence. So you're not just standing on the train track and hoping that it stops before it hits you. You're actually waiting to see some confirmation. And as a day trader, that's important. Whereas before, like I showed, as a swing trader, you have some liberty to give it a little more room. This same idea showed up today in a couple of other markets as well. You can see this is the YM. I like to look at the YM on a 2 minute chart. You can see we had some really strong selling that came into the market right around the same time. That's when we started to get some buying. It's telling you things have changed. If you're waiting for an opportunity to get long in this context of this market, there's some evidence to do so. Okay, just as an idea. We can look at the NASDAQ as well. Now, the NASDAQ is not as highly correlated as the YM and the ES are, but it's still an index market. It's relatively correlated. You can see, again, really strong selling. A little bit of a two-step here, but you can see there was some actual buying that started to come into the market here, telling you that things are starting to shift. So again, I guess the point of this was to just to look at this a little bit differently, whether you're looking at this on a bigger picture, like here's a 15, and just kind of waiting for that level to get hit, knowing that it's with our bigger picture bias and its support, or whether you're waiting for some confirmation. Either way works. Same thing, here's like a 5-minute chart, same thing. Here's our selling wave. The buying starts to come in. You can see things are starting to shift. That's confirmation. Or, on a swing trading basis, you can do that whether you want to wait for confirmation or not. Whereas if you're more of a day trader, you're going to be wanting to wait for some actual evidence so you don't have to take as wide of a stop. So hopefully that makes sense. And if you have any questions about that, let us know. Talk to you soon.